Hi everybody, it's Russell Markham here from VectorVest. I'm just having a look at my watch here, about 2 minutes until 11 o'clock Sydney time equivalent. So let's just do some quick sound checks and balances just before we get going there. Just let us know there in the chat box. I can see if there's any issue in the chat box. Hopefully we're coming through all loud and clear. As always, please do put your questions to me. And we'll have a lot of fun today with this presentation. So just about to get going, I'll just transition back to the main screen here, and we'll chat to you in just a few seconds. All right, just on about 20 seconds until I'm broadcasting from Queensland today, so about 20 seconds. So don't worry, we haven't forgotten about you. I just wanted to put the live stream nice and early just to show that we're here. We're just about there, and let's see, I think it's about time to go. All right, so I'm going to transition across here. Here we go, and as always, please put any questions to me if you can't hear me. Let me know there, or if you're having any issue with the sound, let's catch it out nice and early. Okay, so there we are. Let's transition and let's get going. So welcome everybody. My name's Russell Markham. I'm the Director of Education for VectorVest Australia, and it's my pleasure to see you here today. Thank you. And for those that are going to watch the recording or watch the replay on YouTube, I hope you get a lot out of this. All right, so let's move it across. So transition to across here. And you should now be seeing my slide sets of the big 5 banks in Australia. Which one stands out the most? So it's a really interesting one today. I'm also going to look into the US as well, and we'll pick out the one that stands out currently in the US. I'm going to show you some very useful techniques to show you when is a good time to consider buying some of these big banks. Okay, and as always, I just need to bring up the disclaimer statements here. Please note our licenses there, and you can also read up more per our webpage, per our financial services guide. Today, I'll only be providing general advice. All right, I'm not licensed to give you personal advice. I cannot take into account your personal circumstances in regards to any stocks. Please speak to your financial advisor. Past performance not guarantee future results. So any back tests or forecasts that we use today are intended as a guide only, and those results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. All right, with that said, the disclaimer statement out the way. Big 5 banks, who stands out? Should really have a question mark there, shouldn't it? So what are the biggest banks by market capitalization currently? So what do we mean by that? Market capitalization, so that's a measure of how big a company is. It's just simply the number of shares outstanding, so the number of shares out there, versus times the share price. So what I'm going to do here is I'm going to jump into VectorVest and load that up for you. All right, so I've created a watch list within VectorVest, the big 5 banks Australia. Now, I haven't whittled it down to the big 5 yet. So at the moment, we currently track 25 banks, or at least stocks that are associated with banking. So over here, financials, banks in the financials sector. So there's 25, believe it or not. It doesn't just simply revolve around the top 4 or 5. You might be surprised by some of these here in that list. You might say, oh my goodness, I wasn't aware of that company or aware of that name. So the way I did it in VectorVest, and again, if you're brand new to VectorVest, don't worry. It's just show you just for a bit of fun. All I did is I just simply went stocks, filter by, and then I noted industry group equals, and then in here selected industries. This is just some of the functionality that you can do in VectorVest. I'm just giving you a bit of a quick showing here. If you're brand new, you've never seen this before, don't worry. It's just a bit of a snapshot as to some of the things we can do. It's easy to do once you get to grips with it. It's fun, and then once you find those stocks, you can then add them into Watchlist. And what I've done here is I've just simply quarantined those top 25 stocks, all right, in the banking industry. What you can do here, if you then scroll across, is you can come across to something over here called market capitalization in millions. And what I've done here is I've sorted this column by market capitalization to show us the biggest banks. So it's just simply the number of shares outstanding, so that would be 1,774 million multiplied by the current share price, which is $84.11 as of close of business yesterday. And if you multiply those through by each other, then you get that market capitalization. So that's what that word market capitalization means, if you're wondering. It's just a fancy way of saying how big is the company effectively. You know, what is its current worth based on its share price right now. So you can see here, Commonwealth Bank of Australia tops the list at 149,219 million. Right, so you can add another 6 zeros to that number if that's not big enough already. You've got Westpac at 88,743. So you can see Commonwealth Bank is a lot bigger than Westpac, and then it's quite tightly knit over here. National Australia Bank, NAB, and Westpac are sort of neck on neck. ANZ's just a tad lower at the moment based on the current share price, but these can all three here can move quite quickly, and this is as of 2021. So, and I'll show you why I had that as of 2021 shortly. So let's just do this. I should have really had it as of the current date. That's okay. But that's interesting. You can see how it was in 21. All right, so here we are. This is as of close of business in 23. So there we are, 164,012. You can see it hasn't actually changed that much. National Australia Bank, that's from 21 to 23, and that's 88,000, 75,000 million for Westpac, so quite close neck on neck, ANZ. But this is interesting. You saw in 21, Macquarie was about, what was it, in the 50s, and 50 odd thousand. Now it's come up to 67,000, and it's neck on neck with ANZ. So when you talk about the top five, that's why I thought, well, let's include the fifth, because Macquarie, the fifth biggest, because Macquarie and ANZ are neck on neck. Some days Macquarie will be a top four, and other days it won't. So it sort of fluctuates between the two here. Okay, with that established, I want to show you something very interesting before we start analyzing these banks. If I come down to the bottom here, where it notes Watchlist average in VectorVest. So once you've set up a watch list, you can then come down to the bottom here. And if I right click on this and I view the watch list average, I'm going to show you a technique that's served me very well over the years. Now again, I can't give you personal advice, but I can certainly show you the tools, and then you can decide if that's something that appeals to you. I'm putting on this indicator here in VectorVest that we call CI, Comfort Index. Now again, you've got different layouts with VectorVest. You can see I've got a whole lot of different indicators on. It doesn't need to be complicated. It isn't complicated. This is the average of all of those banking stocks. So we're just taking the average. That's what it is. And then all I've done here is I've added in an index here called the Comfort Index, CI. The Comfort Index is looking for stocks, stocks resisting severe and or lengthy price declines. So it's effectively looking for, resilient stocks that continue to power onwards. So it's purely a technical indicator. It's looking for a smooth left to right price pattern taking place. So if I were to come in, this is for all the stocks I'm looking at it, but let me just set the scene to make it really easy to begin with. If I load up CI here on the Commonwealth Bank, so this is just at one stock level. See here, CI on a scale of 0 to 2, breaks above 1 around about here. Notice how Commonwealth Bank goes for a nice little run. Right, CI breaks above 1, it holds, then it starts to sort of break down and starts to become a bit volatile. And as it continues to fall down, the volatility persists, right? CI can be your best friend when looking at the bank stock, where the initial blast off phase, where it first starts to break out above 1, it starts to depict, a very smooth change taking place in terms of a transition on the share price. What I've done here is I'm taking all of the banking stocks, 25, in fact actually there's 18, I'm showing a maximum of 25, but there's 18 currently, and I'm coming down here and I'm looking at the average, and I'm applying the CI to the average to all the banking stocks, and then I'm going to bring it back a tad here. So based on that methodology, notice here's that blast off phase. CI is nice and strong, so around about here you really start to see it ramping up. These are all the banking stocks. We're going to whittle it down to the big 5. I've called it the big 5 because that's what I'm going to whittle it down to. But for now, here it is. Here are those all of the banking stocks. And if I just simply show you, as of early March through to around about here, you start to see that CI starting to sort of deteriorate. You see it slowly starting to break away around about here. You don't have to wait all the way until it breaks below 1. So around about here, September, October, the blast off phase seems to be over. If I grab, what I'm going to do here is going to grab the big top 5, right? So I'm going to grab the top 5 as of, we saw that blast off phase around about, where was it, March of 21. All right, so I've just set it as of March. Here are the big 5. I'm going to grab the top 5 just to see how they perform. So beginning of March of 21 through until about September, where we started to see, September, October, start to see it deteriorating, that CI indicator. Look at that, 11% returns when the market did 7, and you got some very good returns. CBA 20-odd%, Macquarie, NAB, Westpac, ANZ. All right. Notice here, if I come back here and I have a look again using the powerful CI indicator, here it starts to deteriorate at a rapid rate here, and it starts to break below 1 and then starts to whittle away. No prizes for guessing what happens to a lot of the banking stocks since November of 21 through until the current date. So again, if you come into here, you go, let's roll it forward until November. All right, so November of 21. So there's just a quick way of identifying when it's a good time to consider. And if I grab the top 5 and roll it through until now, look at that. They're down on average, the big 5, they're down 10-odd%. All right, so when looking at when a good time to consider going in, for me, the way I play it and I look at it, I'm waiting for the CI, I'm waiting for this. I'm waiting for the big wave to come up and to drive those banking stocks. And at the moment, the wave has fallen, it's continuing to fall, but I'm getting excited because at some point it's got to turn and up it'll come again. Okay, so with that said, let's have a bit more analysis here and identify the big 5 and drill in a bit more. So I'm going to go through until the current date, roll it forward here as I closed business yesterday. Okay, and we're sorting it by market capitalization. All right, and what I'm going to do here is I'm going to just pick the top 5. So 1, 2, 3, 4, 5, and the rest I'll take out. All right, so I'm just going to select those, remove the selected. So as of 22 March, CommBank's your biggest, NAB, Westpac, ANZ, followed by Macquarie. Macquarie's neck on neck with ANZ. These 4 here are very closely knit in terms of their valuations, but Commonwealth Bank is the big standout in terms of market capitalisation. Now, the next question then is, how do these banks currently stack up? Which one stands out the most? And what I want to do here is I want to do a simple exercise where I'm just going to do this. I'm going to add in a 12-month leading forecast on earnings provided by VectorVest. So if you see earnings starting to rise, and we've seen that quite nicely with Commonwealth Bank over recent months, rising earnings, rising share price. If we come back in time, and you pull it back in time, falling earnings, invariably leads to falling share price. So if I just do this over the last year, in fact, let's pull it back. We'll pull it back just a tad more. Okay, let's pull it back just a. Let's for this exercise here. We can do it over a year or 5 years. I have slides for both, but I thought, it's good to show currently, but maybe 5 year might be better in the analysis for today. So let's have a look over a 5 year period. If I just simply showed you the earnings, so I took off the share price, and let's just say I removed the name, and I've got slides so we can't cheat as such. All right, so I'll just close it out. All right, so, and I want you to tell me whether you would like to own a company with a set of earnings like that. Now, if you had a company with a set of earnings like this, you wouldn't want to own it at that point, but while it's doing this, absolutely, right? So let's jump into the slide set. And you let me know. You can let me know in the chat box if you want. All right. So here I've done it for 5 years. All right. So any prizes for guessing who is this earnings profile? Well, maybe it's giving it away up the top. I might have to hide it. Okay. All right. So anyway, reveal the surprise. It's Macquarie. This is Macquarie's earnings. All right. Let's see. I might have to hide this one. You might have picked up who it is. Who's this one here? It's ANZ. All right. So ANZ did that. So which one would you rather have, Macquarie or ANZ's earnings? All right, Macquarie's earnings stand out much more. So, all right, keep going. Here's CBA. We saw this one, falling earnings, big turnaround in the earnings. NAB, big drop off in the earnings, big turnaround in the earnings. All right, Westpac. Of all of the banks here, I'd say Westpac's are probably not as strong. The big drop off, but it hasn't been followed by a big surge like we've seen in the previous banks. Okay, so Westpac to me at the moment is the one that's under more earnings pressure from what I'm seeing. All right, so here it is combined together. Here's Westpac. All right, so a big drop off in the earnings, but you haven't really seen that explosive pop. Yes, it is coming up, but not as much as some of the other banks. All right, here's CBA. Big drop off in the earnings, but big uplift in the earnings. And look at that. The returns versus the returns here, much stronger. Drive it forward a bit more. NAB, big drop off in the earnings, but big rebound in the earnings. Look, much better uplift than, say, Westpac, which is more anemic. Okay. Rolling forward a bit more. Here's ANZ. Big drop off in the earnings and a good pop in the upside, but they're still under a bit of pressure. Even though the earnings are tracking up, the share price is showing quite a bit of pressure. Okay, here's Macquarie. Not a big drop off in the earnings, and it's just continued to power on. So to our VectorVest loyal and long-term subscribers, it should be no surprise. We've been mentioning Macquarie many, many times over. The earnings jump out, and there's all sorts of reasons. A lot of analysts will tell you, well, it's not a pure banking stock in the pure sense, because it does a lot of funds under management and whatever have you. It's not a traditional in the true sense banking, but at the end of the day, it's still within the banking classification. So if I were to choose based on the earnings profiles and the performance, well, it's clear that Westpac is not as strong relative to Macquarie. I would rather have Macquarie over Westpac. But again, you need to speak to your financial advisor as to what's best for you. I cannot advise you personally. All right. What I've done then is I've used the VectorVest system. And again, it's just easy to set up. It's a lot of fun using the VectorVest system. You can do what's called a performance graph. So all I've done in VectorVest here is I've just said to VectorVest, okay, of those big 5 banks there, I want to benchmark them against each other. And all I've done here is I've just started with a common base, a common number here, and then this is a percentage return in terms of our performance. So there's like 0. It starts at a zero scale. All right, there's your 0 scale, lines up to 0, and then relative to the starting point, how have you performed against each other? You can see the standout performer has been Macquarie. All right, so over the last 5 years, Macquarie is up 167%. CBA, it's about just over 30 odd. Westpac, we've actually got the numbers here. CBA 96, Macquarie 167, Westpac 21, NAB 27, ANZ 22. So you can see, Westpac here in current times, you can see why it's been struggling, because the earnings haven't been as strong. So let's go into VectorVest and do this. So here we are. So all I did here in the VectorVest system, this is how easy it is. You click on graphs, you type in the company you want, right? So MQG, I put in .ax to tell VectorVest it's for Australia, and on the drop down I then go in a select performance. So I'm able straight away to benchmark this against whoever I'm after. So in this particular case here, I'll put it on by itself, and then I'll put in, right, so put in CBA, Westpac, ANZ, and NAB. There we are, we'll put them in, push enter, and I can now benchmark them. And I'll make these jump out a bit more so they're easier to see. All right, and you can save the layouts. You don't have to come in and worry about this again. Once you've benchmarked them, the colors could probably be a little bit different. You can change the colors. There's a lot of things you can do with the VectorVest system. And here we are, just having a bit of fun making them jump out. I want to do this. I just want to go to 1 year. All right, so here we are. Yep, we're in the 1 year. Good. So look at the performance. They're starting to bunch up quite a bit. You can see CBA in the green here. So in this graph here, CBA is in the green, just leading the pack, but it's very closely followed by Westpac, ANZ at the bottom, and NAB. All right, so you can then pull it back over time to see how those benchmarks stack up. The key thing that's going to drive these companies over the long term is earnings. If you are buying into the banking stocks with the more robust earnings, as we can see with Macquarie over the longer time period, it stacks up. Look at that, it's starting to dwarf the other stocks. And the reason being is, if you have a look at this, if I put in MQG, all right, so I'm going to put Macquarie here, and this is Macquarie's earnings, and let's do this. I'll put this over a 10-year time horizon. That's over 10 years, and I'm going to put it neck on neck with sorry, not ANZ. Let's do it with CBA, a very popular stock in Australia. So CBA, and I'm going to change the time here to be 10 years as well. So 10 years, 7 days. Anyway, close enough. All right. So there it is for 10 years. Look at the difference. Look at the difference here. Here's Macquarie's earnings. Here's CBA. It went pretty well, and then bang, it had a heavy sell-off here. It's come back with vengeance, but it's not as solid. Anyway, so there we are. I can't make it jump out as much. I wanted to sort of highlight it. We just need to work with this color here, just side by side. But you can see a very big difference. If you bring in, say, Westpac. So here's Westpac's earnings compared to Macquarie. Big difference again, right? And if I bring in ANZ, here is ANZ's earnings. Not nearly as good as Macquarie. All right, so incredibly illuminating and telling, isn't it? When you look at it like this, you go, "Oh my goodness, why don't I buy Macquarie over ANZ or Westpac?" It might come down to the fact that it's driven by dividends and franking credits. So if you're after dividends and franking credits, well, let's see what we've got currently. All right, so the dividends, so the yield 4% for Commonwealth Bank, 5% currently for National Australia Bank. This is not including the franking credits, so this is not fully grossed up yet. This is just the yield currently, just on the share price. 5.83 in Westpac, ANZ at 6.39 and Macquarie at 4.03. Now, if I look at Macquarie and I go, well, it's actually not that much different to Commonwealth Bank. I mean, 4.03 versus 4.32, it's neither here nor there. But Commonwealth Bank, it's fully franked, whereas Macquarie is 40% currently franked. So the interim versus the final franking credit, it's not fully franked. So if you're after grossed up dividend yield, and that's more important to you than capital growth, then perhaps someone like Commonwealth Bank would be more appealing. It depends what you're after. But I think a lot of investors are saying, these days are saying, I don't want dividend yield at all costs. In other words, I don't want 6 or 7% fully grossed up dividend yield if it means I'm going to lose 20% of my capital growth on a stock. Maybe I'm more comfortable accepting less grossed up dividend yield, and then I'll more than make up for it on the capital growth. Now again, these are things you need to speak to your financial advisor. I can't advise you personally on it, but these are the considerations that take place. Just in the chat box there, anyone want to let us know which of the big 5 banks you prefer, or which one you would prefer to own or currently own, if you're willing to share that. Let us know. Let us know there in the chat box. It's always interesting to know. Okay, let's see here. The final thing I'm going to leave you with now, and that is I am going to jump into the US market. So here we go. And here I am in the US market. And what I'm going to do here is I'm going to have a look at the big US banks. Now, same thing again. I use VectorVest to go and grab out all the banks. All right, and there's 417 banking stocks in America. 417 found. All right, so if I show all, here we go, show all of those there. Here they all are, 417. You can see right up the top of the list. JP Morgan coming up here, Bank of America, all the big ones here. If I scroll down to the bottom of the list, right, some smaller ones here that you may never have heard of. All right, let's do the same exercise we did for Australia. Let's look at the average of all of these banks first and foremost. So here we go. Okay, so here we are. We're looking at all the banks. And let's see, when was the last recent surge in the comfort index? All right, remember what we did in Australia? So I'm going to zoom it in here. All right, so this provides me an opportunity to consider getting, look, this huge uplift in the comfort index. Here is the big wave forming as such, the next wave of money flowing into those banks as such, I guess. And if I zoom it in here, it seems to be going pretty well. And then here it starts sort of fading a bit. You can see that the comfort index starts to slow down. You can see there's been a bit of a gradual breakdown as time has gone on. So around about here is your ideal sort of consideration point, and around about here is probably where you want to sort of look to start, being cautious. And it coincides with what we saw in Australia. So if I come back into here, this time around, what I'm going to do with VectorVest, because we've got so many banks in America, I'm going to sort all these banks by the best combinations of fundamentals and technicals. We have this powerful indicator in VectorVest called VST, value, safety, and timing. It looks at both fundamentals and technicals. And I'm going to go here, and this, you can see the reason I've kept it as of March is because that's when we saw that comfort index starting to shoot up. And if I grab the top 10, and I'm going to run it through until when we saw around about September, October, when things started to break down. Look at that. So that was the last big sort of wave of that was taking place. Nice 17 to 18 odd % returns. Very, very nice, right? So it provides an opportunity, a consideration point to get in. Now, if I come back, now look what's taken place since. Look at this. Here, CI breaks below 1. When was this? Around about March of 22. So if I come back here and I go to March of 22, all right, here we go. Now, if you were an investor looking to short, now I know shorting is not particularly popular in Australia, but there are a few investors that do it. But if you were looking around about March of 22 and you start to see the company index breaking down, instead of buying the top fundamental and technical stocks, you might sort of start looking at some of the less well-performing fundamental and technical stocks, and you could very, very well consider shorting those. So you could, for example, consider those potentially as a shorting opportunity. So if you were to go and short them, these 3 or 4 went against you, but the rest you made a lot of money on. So you would have made over 14%. So in other words, what I mean by that is when you short, you want that number to be negative because that equates to actual returns that you would have made. So you would have made a 14% odd return. Okay, so just some things just to consider and to think about. Now, let's do this. Let's do the same exercise we did for Australia. let's go through. Let's grab the current date. Here we are. And let's find you the best banks in America. And we'll also look at the worst banks. And the banks have been in the news with what's taking place in Silicon Valley. So right now, your top fundamental and technical stock in terms of banking is this one here, MFB, right up at the top of the list. It's got the highest VST score. All right, and look at that. Very nice indeed. And look what I've noted for you today here. Look how this is taking place. CI breaks above 1. Look at that. It's breaking above 1, holding above 1. All right. It's coming off a bit, but that's okay. It's still holding. Look at the earnings. Up and up and up and up they go. And another lockstep sort of jump up here, which is always encouraging to see. So MFBP ticker code. M&F Bancorp is one that jumps out. At the bottom of the list, no surprise for guessing it's going to be at the bottom of the list. Look at this. SVB Financial Group. Silicon Valley Banking. All right. Been in the news for all the wrong reasons. And here's something that's interesting. You didn't need to wait for all of that news to come out behind what's going on with Silicon Valley banks. You saw this a mile out with VectorVest. Look at this. CI starts breaking below 1 here. It tried to come back up and it went back below 1. There it is. Your comfort index is broken below 1. And around about here, you really start to get worried, because if you were still holding on, not only would you have seen CI deteriorating, but you're seeing your earnings starting to roll over at a rapid rate. You're seeing that the VectorVest system is flashing up that this stock has got a sell rating a lot of the time, which is a discussion for one of our up and coming next hot topics of interest. The 4 steps to know when to sell. We'll cover that then. But needless to say, just a quick overview here. Plenty of sell ratings popping up. It was jumping out at you that this company's in a lot of trouble. No surprises then to see what took place. It went from $267 overnight pretty much down to $106. It literally collapsed overnight. All right, plenty of warning there telling you to be careful. All right, so again, if we finish off today and we just go back to Australia, you can come back in each and every day with your banking stocks and put on the powerful comfort index on here as well. You know, have a look. You know, how is it stacking up? Let's change the style, make it jump out a bit more. All right, so we can see over here, CBA at the moment, earnings are holding up. Slight bias to the downside, a little bit choppy, but not that bad. But look at this, CI is broken below 1 here. Comfort index broke below 1, and we haven't really seen the share price recover since. It's sort of bouncing. Here it breaks above 1. There's your blast off phase. It goes from about $86 odd up to $96 odd, and then it starts sort of rolling off. So at the moment, where is it in terms of the comfort index? It's down at the moment, but the earnings are still holding up very nicely. Next one here, NAB. There we are. CI breaks below 1. Where was it? Around about here. There we go. Just breaks below 1 there, and you can see it's been under pressure since. And earnings over here just under a little bit of pressure currently too. All right. Next one across. Let's have a look at this. Westpac. You can see here Westpac's under a bit of pressure there on their earnings. We've seen it looks like the weakest link there in terms of the earnings currently of the big 5. And again, if we go back to CI, you can see CI broke below 1 quite a while back, around about here, December of 2021, and hasn't really sort of performed since. All right, plenty of warning there to tell you this wasn't going to be one that was going to rocket up in price anytime soon. All right, ANZ, earnings sort of slow and steady, but good. They're tracking up, but your comfort index has been below 1 for quite some time. All right, so there your CI goes below 1, and we haven't seen ANZ perform since then. It's been under pressure technically. Macquarie, well, you're starting to see this. The blast-off phase took place. Beautiful growth there, but you can see here just a slow sort of unwinding of the CI until eventually it breaks below 1. So here it breaks below 1, and we're waiting for it to come back up again, but the earnings are rock solid. So as soon as that CI picks up with rock solid earnings, then you'd be interested to consider getting in. But again, don't assume. If the CI does go below 1, you want to make sure to confirm that those earnings are still holding up. All right, so let's see. Mark notes Macquarie, but own NAB. All right, good. I think your name's familiar, Mark. You must be a VectorVest subscriber. Have we influenced you in the past? And again, you know, we can't give you personal advice. You do need to speak to your advisor in regards to what's good for you. But you're now armed with the knowledge. You can trial out VectorVest, check it out for yourself, and you can check this through with whoever gives you personal advice. You're now armed with all this great knowledge at your fingertips now. So thank you for everybody coming along today. If you'd like to trial out VectorVest and see how it stacks up for you, believe you me, you won't be disappointed. We've been around in business. Our head office is in America. We've been operating in Australia for over 12 years now, 13 odd years. Here we are, vectorvest.com.au. If you go to our website, and on here you can click on risk-free trial, and on there that's where you can take out a 30-day trial for $9.95 USD, called 13 Australian dollars. All right, so you can trial out for $9.95. In addition to, let's just see, I'll just open up another web page here. I'll show you where else you can check us out on YouTube. I'll just bring this across. I'll just type in VectorVest Australia, just bring it across for you here. Here we go. All right. So here's VectorVest Australia on YouTube. Check us out. And you can see here we're going live at the moment. You can also see all of our other videos. We've got plenty of great videos on our YouTube channel. Do us a favor, if you like what you saw today, please click like. All right, so we're growing the channel, 851 subscribers. We've been growing pretty rapidly. Click like, and of course, it gives us even more incentive to continue creating great video and content for you. As well as that, I just want to show you on our web page, we've got a live chat box here as well. I'll just refresh this. On here, you can also check out our blog. I just need to zoom it down a bit. There we are, blog. So in here, you can catch up with some of the previous hot topics of interest, building a watch list, identifying the highest yielding stocks in Australia that are most reliable. That was a really interesting one. And I'll just close it out. And what else we got here? Successful investing course, get yourself set for 23. This was an interesting one. The big end of town starts to fire. We covered some of the big blue chip top performers. And anyway, you can see just plenty of great content in there for you. Okay, so hope you enjoyed it. If you want to take it a trial, www.vectorvest.com.au. You can take it a trial and repeat the exercise that I've done here. And if you would like, carry out the exercise and do the same exercise, but do it with a different industry or sector. So if banking isn't necessarily what you're after, repeat the exercise. Do it with, gold stocks, or do it with mining stocks, or do it with manufacturing stocks or consumer staple goods and services. The exact same methodology that I've taught you today, you can apply it. And if you don't want to do it for Australia, then you can do it for America, Canada, Europe, UK. As part of your trial, you'll get access to all of those countries. And if you do become a subscriber, you'll also continue to get analysis across all those countries too. So I'd like to thank you for coming along. Thanks again. I hope you got a lot out of it. My name's Russell Markham. It's been a pleasure having you today. And as soon as this is finished, I think it'll buffer on YouTube, and you should be able to watch the replay. If you keep this link open, you should be able to go back to the start and watch the replay. All right, so I'll leave it there. Thanks again for coming along. Have a great week, everybody. Bye for now.